probably heard whispers about a 50-year mortgage. Yes, 50. Some people think it could fix our affordability crisis. Is this the answer or a risky shortcut? Today, I'll break down what a 50-year mortgage really means for your payment, your equity, and your financial future. Hey everyone, it's Pauline Lee, Realtor and Mortgage Loan Officer. If you want to run your own numbers, message me anytime and check out my free mortgage rate dashboard. The link is in the description. Why is a 50-year mortgage being considered? Housing affordability is at one of the most challenging points in decades. Prices keep rising faster than income, monthly payments are higher, and many buyers feel completely priced out. That's why some policymakers and lenders are floating the idea of stretching the mortgage term to 50 years to make the payment smaller. If you want to talk through your buying power or get pre-approved, feel free to book a quick discovery call with me. The link is provided in the description. How a 50-year loan changes monthly payments. The idea of a 50-year mortgage looks appealing, but the actual payment difference might not be that meaningful. Keep in mind the lenders will price in the extra risk of a much longer loan term. My guess, the difference could be 40 to 60 basis points higher, reducing much of the expected monthly savings. Let's look at an example. On a $500,000 purchase with 20% down or $400,000 loan, a 30-year payment at 6.25% is $2,462 principal and interest, versus a 50-year payment at 6.75% is $2,330. That's a savings of $132 a month. Helpful? Sure, but you'll pay more interest over time, so you'll not want to stay in the loan for the long term. Comment the word calculator if you want me to run these exact numbers for your price point and down payment. Affordability versus true cost. A 50-year mortgage may help someone qualify, but it slows down the wealth building part of homeownership. It may take 15 to 20 years to build meaningful equity, much longer than a traditional 30-year loan. If you want me to compare side-by-side 30 versus 40 versus 50-year payments for your budget, just send me a message. I'm happy to run scenarios. Here's the key message: risks, downsides, and long-term investment. A 50-year mortgage comes with some real trade-offs. Much lower equity growth, since most of your early payments go towards interest. Limited ability to refinance or sell, because you may build very little equity in the first 5 to 15 years. Potentially higher rates, as lenders price in long-term risk and inflation. And here's the most important reminder. Home ownership is a long-term investment. The goal isn't just to buy, it's to build wealth. A 50-year mortgage gives you short-term payment relief, but significantly slows the equity you build over time. If you're unsure what loan structure fits your long-term goals, schedule a mortgage strategy session with me. It's completely free and no obligation. Is a 50-year mortgage a terrible idea? Not necessarily, but it's not a magic fix either. For some buyers, it could help them enter the market instead of renting forever. But for most, a 30-year or 40-year term gives a healthier balance of payment and long-term equity. Before choosing a loan product, DM me the word plan, and I'll help you map out a personalized plan so you don't sacrifice long-term wealth for short-term relief. How the 30-year mortgage became standard. Quick history. The 30-year fixed mortgage has been the foundation of American home ownership for almost 100 years. Before the 1930s, home loans were usually 5 to 10 years with big balloon payments. That caused massive defaults during the Great Depression. So the FHA and later Fannie Mae standardized the 30-year fixed mortgage we all know today. A 50-year mortgage would be a major shift away from a century-old system designed around stability and sustainable homeownership. If you love learning the why behind mortgage products, subscribe. I break down complicated mortgage topics in simple, practical ways. So what do you think? Is the 50-year mortgage the answer to the housing affordability crisis? Probably not. It may not solve affordability, and it definitely slows down the rate at which you build equity. But what it does do is give buyers another option, especially people who might otherwise remain lifelong renters. For some, it could be a stepping stone to get into home ownership, build equity, even if slowly, and refinance later into a 30-year or 40-year loan when rates drop or income increases. It's not perfect, but it is an option. and more options can help more families become homeowners. Would you ever consider a 50-year mortgage if it lowers your payment? Or does it feel more like a long-term trap? Drop your thoughts in the comments. I read every one. If you're planning to buy, refinance, or just want clarity on your options, I'd love to help you run the numbers. I'm Pauline Lee, Realtor and Mortgage Loan Officer. Schedule a free strategy session using the link below. And don't forget to like, subscribe, and share this with someone who's thinking about buying a home. I encourage you to get pre-approved.